Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better understand not only what we see out there in the global landscape, but also how we're currently positioned across all client accounts. We continue to see struggles with the U.S. economy slowing. The Purchasing Managers Index obviously has been down consecutively for months now. The ISM also has been slowing. So we're seeing the rate of change is actually turning negative. When you go into a recession, things just don't all of a sudden get bad. They actually start to get a little bit slower, a little bit slower. So if the indicators keep coming out the way they're coming out, we will definitely be in a recession. Probably not called until sometime in the fourth quarter of this year, unless something drastically changes with our government and they do something actually correct for once. There's been a lot of talk about QE2 or QE3, excuse me. We've had QE2, we've had QE1, we've had a lot of different things within all those QE plans, quantitative easing. Our government continues to talk about they're going to do whatever it takes if they really see more slowdown. Bernanke spoke this week, of course. He said there's further deterioration in the U.S. economy, but they didn't act on anything, so the market sold off. Actually, the market's been down all week, other than today. The job numbers in the U.S. came out and they were a little bit better than expected. They were around 150,000 jobs, which is a jump from last month, which was really slow and bad. Seasonally adjusted, we don't look at month by month because it's just too short of an indicator. Sometimes you'll get a big jump up, sometimes you'll get a big jump down. But generally speaking, the job numbers were decent, not great, at 150,000 jobs. That barely treads water with the population growth. So at the end of the day, unemployment actually ticked up to 8.3% from 8.2%. So unemployment actually is getting worse, not better. We've been over 8% for 41 months, which is the worst recovery we've ever seen since the post-war. At the end of the day, Europe continues to fall apart. Super Mario, or Mario Draghi, we call him Super Mario, gave a big talking speech last week about how he was going to do whatever it takes to save the euro. And of course, the markets applauded that last week. Then he came out yesterday, and essentially, it was kind of another plan to plan for a plan that they're going to talk about. So no real concrete news. There's a little bit of rhetoric, different change, but at the end of the day, they're still not acting. Now you have to remember, in the EU, there's 17 countries that have to vote on all this stuff. And if you look at all of Europe, there's obviously many more countries. So there's a lot of issues going on, and this is not going to be solved quickly. Because of the problems that's happening in Spain and Italy and Portugal and Greece and starting to, again, spread, these are reasons that we have concerns. Now, we are conservative in our client portfolios. We're actually long publicly traded REITs. We're long the Treasury. We're long high-grade corporates, high-yield bonds, and emerging market bonds. We really don't have very little, if any, equity-based exposure like the S&P 500 or smaller mid-cap or emerging market stocks in the portfolio, because generally speaking, our other areas, based upon our global tactical opportunity strategy, have actually been a little bit stronger. Now, from time to time, our strategy will lag from a month or quarter or two. That's going to happen with any strategy, but we are very impressed with how things have actually turned out month to date and last month, and how things are actually progressing quite nicely for our client accounts. While we're lagging a little bit the S&P, we're actually up over a lot of the other benchmarks around the world, which we're happy with. The S&P seems to be gravitated upwards and held up because it's the cleanest shirt in the dirty laundry basket, as we call it, and it appears that investors really, if they're going anywhere, they're putting into very large stocks, and the S&P typically is the last shoe to drop. Now, the shoe may not drop again if our government does what is correct, and if the thesis changes out there, of course, our portfolio will be adaptive and to change with it. But right now, we are conservative. We had these bounces up, we have a bounce down, we have a bounce back up, and we seem to be trading in this trend line. And at the end of the day, we'll continue to watch the news, we'll follow our relative strength portfolio, our global tactical opportunity portfolio, and it will lead us in the right direction. Again, we're not as concerned what happens month by month, but we are concerned year by year, and we want to, the biggest and most important thing that we can stress is risk management. I'd rather give up a couple percentage points on the upside than lose 40 or 50% of our clients' money in a major recession. The last two recessions we had, the market, the S&P benchmark was down around 50%. That's big. We still haven't recouped from the last recession in 2008, In fact, the market, generally speaking, the rally off the lows has been pretty anemic on volume. This does make us somewhat concerned, so again, hence the conservative stance. Our strategy is adaptive, as I mentioned earlier, and we will adjust if the data comes out that makes us adjust accordingly, either for more upside potential or even further risk management, protecting the downside. If you have questions about your portfolio, if you're concerned about your money, of course, give us a call. If you're not inclined and you'd like to talk to my firm about managing your wealth, give our office a call. We always like taking on new clients who are nice people who want to better their situation. Make sure you listen to Sunday's show. Of course, it's going to be live. It's a full 2 hours from 10 to noon Eastern. I'm going to talk more about the economy, what we see in the global landscape, and I'm going to answer all your questions. Have yourself a very safe and profitable weekend.